All right, it's this week's Money Minutes. We just got outside the club after partying all night. Okay, I'm joking. We're in the Chelsea Meatpacking District. This is the spot for all the clubs. So what we want to talk to you about today is, you might be saving in your 401k, you're putting money to work, and you're trying to figure out what's the best investment instruments I should be using with my portfolio.
We bring you these videos every week just to give you some common sense advice when it comes to investing. And when you're looking at investing, we hear the term ETF thrown out a lot. Maybe your 401k has an ETF. When you have your brokerage account, you're looking at an ETF. Everyone's saying, oh, the ETFs are the new way of doing things. But today we want to talk about what actually is that, and is it something you should be thinking of in your investments?
All right, so what the is an ETF? So let's break down that acronym ETF. It's essentially Exchange Traded Fund. Okay, and let's break down every word of that, but we're going to start backwards.
So let's start with the F of ETF. That stands for fund. And what that is rather than going out and buying a stock like Apple or Google or Microsoft, you can buy a fund, which is a basket of all of those things underneath them. So you can have a whole fund that maybe has 100 different companies underneath it, rather than just owning one stock. So it's a good way of diversifying your money rather than just putting all your eggs in one basket.
Okay, T, and my cheerleading skills are not that good. T is for traded, okay? And what that means is this portfolio of stocks can be traded, and that simply just means I can buy it, I can sell it. It's easily or liquid, meaning it's able to be sold or bought very easily. That's what we mean by traded.
The E in exchange traded fund stands for exchange, which means you can actually buy and sell this throughout the day on an exchange or the stock market, which means there's actual marketplace where I can go out and I can find people who are willing to buy it from me, or I can go and I can buy it from people who are willing to sell it to me. And you can do that any time in the day that the stock markets are open.
Okay, so that's the beauty of the exchange traded fund, is the fact you have this marketplace where you can sell it quickly for cash throughout the day, or you can buy it quickly. We call that being liquid because it's easily bought or sold. Now, we don't want to confuse this with what we call a mutual fund. A mutual fund is like an exchange traded fund, if you're not confused yet, except for you can't buy and sell it all day like you can an exchange traded fund. It only is bought or sold at the end of the day. And what that means is if you're looking at putting your money into an exchange traded fund or a mutual fund, the exchange traded fund's a better option because it's more liquid.
Now, just to wrap up here, an exchange traded fund or an ETF is a good way of getting your money invested and diversified. So it's a liquid way of owning many different stocks. And it's a really cost-effective and tax-efficient way of doing that. And it's kind of the newer school model to what Ryan mentioned, a mutual fund, which is kind of the old way of getting all of those benefits as well. So the only kind of problem here, or caveat, is there is a whole world of exchange-traded funds that all invest in different things. And that's where it can make sense to work with somebody who can actually give you some advice on which exchange-traded funds make sense for you and your personal goals. Now, if that's something you're interested in, we do complimentary financial reviews every week. If you want to see if you qualify for that, just send an email to moneyminutes@paynecm.com with this header, and we'll see if you qualify for one of those financial reviews.
If you love our content, you wait all week just to hear what we have to say about finances, which we know you do, you can subscribe to our channel below. That's this week's Money Minutes. As always, be bullish.